Buenas y bienvenidos a este tercer panel del Dominicana Fintech Forum 2021 que organiza la Asociación Dominicana de Empresas de Fintech a Fintech. Mi nombre es Virginia Velázquez y soy la directora ejecutiva. Recordarles que si se han perdido alguno de los paneles que hemos tenido anteriormente, todos los paneles y conferencias del Dominicana Fintech Forum van a quedar grabados y pueden acceder a ellos durante 30 días después de que finalice el evento. Así que les invitamos a no preocuparse y a continuar sintonizándonos en este día de hoy. Recordarles también que pueden visitar los stands de nuestros patrocinadores que se encuentran en el Expo Hall para conocer más de los productos y servicios innovadores que ellos tienen para ustedes. Y conectar es importante en estos eventos, aprovechar para hacer nuevas relaciones. Tenemos una sección de asistentes donde pueden conversar, establecer reuniones, hacer contactos con los otros asistentes del evento, así que invitarles a usar esta funcionalidad y aprovecharlas. Antes de pasar a nuestro próximo panel, pues queremos compartir con ustedes un video de nuestro patrocinador Megabyte, el Banco Popular Dominicano.
Vamos todos a buscar el mejor de los motivos que nos muevan, nos impulsa a lograr los objetivos. Hagámoslo por los hijos, los abuelos, los amigos, por todo lo que en esta tierra junto compartimos. El lado positivo, yo quiero ver contigo el lado positivo. Todo da sentido si todos de la mano hacemos el camino. Juntos encontramos el lado positivo.
Desde el lado positivo, los retos se ven como oportunidades que juntos podemos superar. Popular, a tu lado siempre.
Bueno, y el siguiente panel que tenemos hoy se titula La conexión Fintech, monedas digitales y bancos centrales. Llega a nosotros gracias a Mastercard y va a ser en inglés, así que les invitamos a quienes no se sienten seguros con el idioma y lo desean a usar la traducción simultánea que está disponible debajo de sus pantallas. Pueden elegir escuchar en original en inglés o escucharlo traducido de forma simultánea en español. Nos van a estar acompañando. We will be joined in this panel, I will switch to English now, by Carlos Delgado, who is the economic consultant at the Regulations and Financial Stability Department of the Central Bank of the Dominican Republic, as well as Richard Douglas, who is the co-founder and CEO of Island Pay, a Fintech that operates in the Bahamas. And as the moderator, I have with me now Javier Gamboa, who is the Public Policy Director at Mastercard. Welcome, Javier.
Thank you, Virginia, and thank you, Fintech, for this invitation. I'm very excited to have this opportunity to be the moderator of this panel on what is probably the hottest topic on financial policy around the world. I would like to start this introduction with a brief presentation of the topic as a context to a discussion that we will have with our panelists. Let me share my screen for one moment. Are you seeing my screen right now?
If the technical team can confirm.
No, you can see the...
I believe now, oh, for a moment we saw it. Exactly, there it is.
Can you see it now? Okay, perfect. Thank you very much. Digital assets have been hailed everywhere for its potential for financial inclusion and simplified financial services. As a consequence, investments in digital assets and its blockchain technology that we associate generally with it are projected to grow significantly in the coming years. For example, the global market for digital assets and blockchain technology is expected to reach $390 billion by 2028. That's an 83% compound annual growth rate expected during that period. Total global fintech investment reached $550 billion in 2019, with a 24% compound annual growth rate expected through 2025. And the number of crypto wallet users has increased 97% just in 1 year between April 2020 and April 2021. Although the category of digital assets includes assets such as the so-called non-fungible tokens that you all have heard in the news. We are going to talk today about the most commonly referred ones, which are the digital currencies. Digital currencies include three types of currencies. The most well-known are the free-floating cryptocurrencies, the one that for sure everyone in this audience have heard, typically issued by decentralized systems, where the value is often volatile and subject to uncertain regulations depending on the corresponding jurisdiction. A second category are the stable coins, which are cryptocurrencies designed to have relatively stable price, typically backed by cash or other approved financial instrument. For example, USD coin or Paxos, just to mention the two most well-known probably. And last but not least, the so-called central bank digital currencies that are known as CBDCs, a digital version of deposits issued by central banks, which are indeed direct liabilities from the central banks. At MasterCard, our approach will vary depending on the type of currency. In the case of the cryptocurrencies, for example, we have a crypto card program to convert the crypto assets in fiat currency, which means the common currency that we all use. In the case of stable coins, the approach is evaluated on a one-on-one basis for potential use as a direct means of payment, and not only as an asset, as is the case of the cryptocurrencies, the free-floating cryptocurrencies, based on our guiding principles of regulatory compliance, effective stability, and consumer protections. At the end of the day, trust is the key component of our network. And finally, in the case of the CBDCs, we work with central banks and other partners, as you will see and hear today, to give people the opportunity to convert the digital currency to the traditional currency through our acceptance network, and also support the development of the CBDC itself through a virtual testing environment that enables the simulation of issuance, distributions, and exchange of CBDCs between banks, financial services, and people at large. Today, I will stop sharing my screen now to start a conversation with our panelists. Could you confirm that it's not sharing now? I believe so, no? Right. Today's panel will focus on this last type of currency, the CBDCs. For that, we have the privilege to count with Richard Douglas, which is the CEO of the Fintech Island Pay. If digital currencies has been the hottest topic on this industry, in the case of CBDCs, the Caribbean has been the epicenter, and ground zero of this epicenter has been the Bahamas with the sand dollar, which has been hailed as the world's most advanced CBDC. Richard, thank you again for being here with us today. Can you please explain to the audience what is the sand dollar digital currency and its benefits for the economy of the Bahamas?
Sure, yeah, thanks, Javier. So the sand dollar was conceived by the Central Bank of the Bahamas in 2019. And the goal was to create financial inclusion across the Bahamas. A lot of the banks were closing in some of the remote islands, which left places where settlements of people weren't able to get to a bank to deposit or withdraw money or cash a check or anything like that anymore. And they had to get on airplanes and fly to a major city to do these transactions. Then there's also a major segment of the population in Bahamas that is just unbanked completely. For a lot of reasons, they don't have the right documentation, they don't have the right status to open a bank account. And also having a bank account in Bahamas is expensive. There's monthly fees, $10 or $12 a month to have an account. There's a fee to cash a check. There's lots of other fees that people just don't want to pay as well. So the central bank had this idea to create a digital currency and encourage licensed financial institutions to integrate that into the banking system, into mobile wallets. And in our case, we've also integrated it into a way to load a MasterCard as well. Our idea to make the CBDC even more useful for people is to be able to allow them to load it onto a MasterCard so that they can actually spend that sand dollar anywhere, not just at a local food place or a restaurant, but also buy something online or subscribe to an online streaming service as well. So it's been an interesting project, and there's been a lot of uptake so far.
Excellent, Richard. Thank you very much. How did Island Pay contributed to the development of the and the deployment of the Sand Dollar project? And I know how did MasterCard help to enable the acceptance of the solution? Could you talk about a little bit about this?
Yeah, sure. So, we did a lot of, so we had a mobile wallet before Sand Dollar was conceived by the central bank. So we already had customers using a wallet to do things like top up mobile phones or pay utility bills. And when they created the Sand Dollar, we created other solutions for our customers. So, for example, we've integrated the telephone company or the cable TV company through our e-commerce APIs. So you can go to the phone company's website or the cable TV company's website and pay them or buy a service from them with your phone, right from your mobile phone, using Sand Dollar. We've also done things like integrating retailers, physical retailers, using a point of sale, a small countertop point of sale device. Customers can walk in and make a purchase with their phone at a retailer. And we also have integrated one of the food delivery companies, like an Uber-style food delivery company, where you can use their app to order your pizza, for example, and you can pay right inside of their app with Sand Dollar.
Excellent, Richard. Please tell us the challenges and opportunities you see for the fintech community of these digital currency opportunities, something like the lesson learned in this process.
Yeah, I think the biggest lesson is adoption, right? Is people, are apprehensive to try something new. So our experience so far in this journey has been that adoption was slow. When people did try to use the Sand Dollar solution, they tried it with a small amount of money. Maybe they loaded $5 into Sand Dollar. Maybe they made a small purchase and bought an ice cream or something. And then a couple months later, they were loading hundreds of dollars into Sand Dollar. And I guess it's been about a year now that the project has been fully live nationwide. And now people are doing regular transactions of good volumes, and they're also holding balances in our wallets with Sand Dollar and trusting it as a leaving some Sand Dollar on their phone for when they need to use it.
Excellent. Definitely a game changer experience. Now I will turn to Carlos, and again, Carlos, thank you for joining us. As a director of regulation from the Central Bank of the Dominican Republic, you have a very key role in this discussion. I know that the Central Bank of the Dominican Republic is one of the, approximately 90 central banks in the world that are following the issue and the development of CBDCs. Carlos, what can you tell us about the vision of the Central Bank of the Dominican Republic on digital currencies?
Thank you, Javier, and I hope you can hear me well and all the audience. Let me start with the usual disclaimer that my opinion is not necessarily the opinion of the central bank or central bank authorities. But regarding your question on what is the vision of the central bank on CBDCs, I would start from the origin of the problem. It's usually the way this is stylized in the mind of a central banker. For the proper functioning of any economic system, people need to perform economic transactions that provide them with consumption, investment goods, and services. Transactions that in turn are greatly helped by the existing of a common means of transaction or payment that reliably represents the value between the exchanged good and services. So in this provision of means of payment, the central banks have been a loan provider for a long time as a provider of a public good, which is central bank money. And with it, monetary and financial stability. This stability stems from the confidence and certainty that central bank provides as the issuer of the generally accepted means of payment. Now, with the gradual digitalization of the economic landscape, this has brought for the central banks an open question, and is how to keep the provision of this public good in a financial and economic system which is subject to significant changes that arise from technological development and its application to financial and economics operation in general. So this is the key policy question. Perhaps, this previous argument is most characteristic of central banks that operate in deep financial markets. That is, where most economic transactions are represented or go through the financial system, and where the levels of financial inclusion are already high. In those cases, the advancement of privately issued digital money could represent a key factor to ponder on a possible displacement of central bank money. But in the case of countries like the Dominican Republic, probably also the case of Bahamas, where the financial system still shows areas for improvement in terms of financial deepening, financial inclusion, and financial development in general, the case of the CBDC has the side of being a potential facilitator for financial innovations that induce financial inclusion. And this last dimension has been quite predominant in the case of the works that have been developed in here in the Central Bank of the Dominican Republic, where the promotion of a more inclusive financial environment has been a key issue, especially as we have seen the need to promote growth and employment by turning the loss of efficiency that is implied in the use of cash, coins and bills into gains of efficiency that increase commerce and economic activity. At the same time, in the Dominican Republic, the inflow of remittances has played an important role in the provision of external sources of funds from the external sector, which highlights the need to take advantage of this reality and turn these resources into a more productive use. And in this topic, the possibility that CBDCs can enhance the remittances market by reducing the financial cost and time of transactions in a secure way is also quite promising and influences the view that we have on CBDC. Lastly, the view of the central bank also encompasses elements that are related to the maturity of the financial system and the economy as a whole to adopt innovations. It also accounts for the considerations regarding the risk of disintermediation that a CBDC might suppose. The view also weighs elements related to the administration of personal data and cybersecurity that would be implied in transactioning with CBDCs. It also understands the solutions that CBDCs might not follow common architectures or designs, making it difficult for a one-size-fits-all solution. But still, CBDCs might have cross-border impacts. Finally, the view on CBDC also considers legal elements that could justify a look into the constitution of our country, being that the decision of a CBDC is a sovereign decision. All considered, CBDC is a topic that merits deep evaluation, continued research, and an intelligent pondering of different designs in order to make well-thought decisions that can be well received and adopted in the market while preserving monetary and financial stability. In CBDC, in CBDR, in the Central Bank of Dominican Republic, we have always been welcome to study and to adopt methods that allow us to continue the pursuit and fulfillment of our policy goals. So I think this sums up more or less the vision of the central bank on CBDCs.
Excellent, excellent, Carlos. Very comprehensive answer about the vision of the central bank. I was thinking, for example, the cases of remittances that you highlighted, a very important one for the country and the region, indeed. In that regard, what role do you think the fintechs and the private sector can play within this vision of the CBDR on digital currency?
Well, as commented before, as I was saying before, a CBDC is a central bank tool that seeks implementation. Now, this is the challenge that Bahamas faced in the early implementation of the $100. So you seek implementation in the market to ensure the full reaping of benefits and the preservation of the monetary and financial stability. Now, in this regard, the topic of interoperability becomes crucially relevant. That is, from an adoption standpoint, what you would seek for is an instrument that can be widely used for settling transactions in virtually any digital environment, with seamless interactions and total absence of frictions that might give place to any uncertainty at the moment of payment. Now, for this, for a CBDC, from its design, it would need to be flexible enough as to be able to interact with any point of sale, any point of use, that is, with any public or privately owned infrastructure that supports payments and transactions. In this regard, the design of a CBDC would be greatly benefited with the interaction with key industry players and the broad base of users. Hence, a dialogue and technical understanding with the private sector becomes a necessary feature for the successful adoption of a CBDC. Now, the role of fintechs and the private sector does not end there. One important element of the participation of the private sector has to do with conveying an innovation culture to the financial system and thus to the economy as a whole. You know, it needs to be understood that policy measures become feasible when they reach a point in which the implementation of the policy yields greater benefits than the costs of the policy itself or the cost of doing nothing. And one notable aspect of CBDC is that it seems to have important network effects. That is, it yields greater benefits for citizens as it becomes widely accepted. Now, in this process of adoption, you know, this does not occur in a vacuum. All economic processes have causes and determinants, and the process through which the financial system innovates has a main origin and is to seek efficiency that allows private initiatives to generate positive returns. This is the standard price to marginal cost idea in the standard microeconomic models. And in this context, fintechs becomes largely relevant as they are defined by the intersection of finance and technology, a condition that allows them to transform financial processes to make them less costly and more relevant to people's lives. And this key block, that is the capacity to transform a process so it is less costly and more useful for people, is what drives adoption in digital financial services and provides a stream to reach a maturity in terms of financial development, which is at the same time a principal condition to amplify network effects and reach a policy stage in which CBDC can be successfully justified and implemented. Yeah? So as they say, you know, culture, it's strategy for breakfast. So as soon as we can realize that the financial industry exports innovation culture to other sectors of the economy with which it interacts, the more conscious and intentional this process is made, and faster we reach a digital culture that might support adoption in innovation in general. It also needs to be remembered that in the case of let's say, general purpose CBDCs, now they imply a system on which they operate that includes operators, service providers, data service providers, application developers, providers of point of sales. That, I mean, an entire ecosystem that highlights the importance of the private sector in any CBDC initiative.
Thank you, Carlos. Excellent points, and I like the way that your answer complement the answers from Richard, as you mentioned at the beginning of your answer. Interoperability is key. How involving the private sector, like Island Pay in the case of the Bahamas, created an opportunity to expand the acceptance and the adoption of the CBDC and to comply with the objectives of the measure. Is there a specific CBDC project in the case of Dominican Republic? What can you tell us about it?
Oh yeah, you know, currently the central bank is under a phase of, say, study and evaluation of CBDC as a policy tool. You know, as many central banks of the world, they are actually in this kind of phase. But nonetheless, we have internal teams and instances in which we specifically study different aspects of CBDC, such as the monetary implications, financial stability considerations regarding disintermediation risks, teams that study elements on cybersecurity, information technology principles to be observed, legal concepts and regulatory development that is needed for CBDC implementation. And for the time being, these technical teams, you know, they construct and assemble the findings and the reasoning that is produced by careful and considered research while trying to gauge the costs and the benefits of different types of designs that allow for the identification, let's say, of principles that are to be followed for CBDCs, such as low cost, convertibility, conveniency, security, and such. At the same time, the central bank participates in projects and initiatives that are oriented towards the gradual digitalization of the financial system and the economy, such as the Innovation Hub, where we participate with other regulators in a platform that allows us to dialogue with the industry and better understand, let's say, how to facilitate and guide financial innovation. Also, we participate in the Digital Transformation Cabinet of the Ministry of the Presidency, in the Digital Economy Group, from which we actively support an agenda to promote digitalization of the economic processes to make them more competitive and inclusive. You know, this entire way of doing policy are based to an identified need for the adoption of financial innovation processes to be sustainable, to be beneficial, and to be organic, in the sense that they are the product of market dynamics that allows us to provide sound policies with net positive benefits and increase the capacity of the central bank to continue the pursuit of the monetary and financial stability, which is our main goal. Yeah.
Absolutely. Very clear. We are already starting to receive questions from the audience. Please keep sending to us, and we will ask our panelists as far as we can go here. Richard, there's a question related to what you mentioned. You mentioned that the adoption has been probably the main challenge here. What do you think can be done to boost the adoption of the digital currency?
Yeah, that's a great question. So the central bank is actually going through a real push for educating the consumers and the merchants on the value of using a CBDC, getting out there in the news and putting on webinars and things like that. to educate people on the value of using a CBDC and the security, the safety, the convenience. And then additionally, the government, the Ministry of Finance has recently said that they're going to start digitizing their payments and making payments to vendors and suppliers and perhaps even salary payments in sand dollar as well. I think that like anything, it's probably true that the merchants are less interested in accepting something new as a payment method until they see that they have customers for it, because the merchant has to there's an expense if you're a merchant, right? And I think driving customer adoption and putting money into customers' wallets is really going to accelerate the adoption in the next couple of years.
Excellent, Richard. And I have an additional one for you from our audience. How the entrepreneurs like yourself could, and for the benefit of the many entrepreneurs that probably are in the audience, could raise their trust in central banks and public institutions in order to develop its ideas without fear of being copied or blocked or something like that. What can you tell us of this great experience of working with the public sector as an entrepreneur?
Yeah, that's another good question. So, like I said before, we had a wallet and we were licensed by the central bank as a payments provider before they created sand dollars. So when they released a policy paper, we asked the central bank what exactly their plan was, because it sounded sort of similar to a mobile wallet and digital money, right? And their answer was that they are a policymaker and they're not a business. You know, they weren't going to provide customer service or launch their own wallet or anything like that. They were going to try and give their licensees of the central bank more tools to accelerate digitization and do more digital payments. The difference between, say, USDC, like you mentioned before, and a CBDC is that the CBDC is backed by a government, right? It's not backed by a private company. And when we talk to merchants and consumers about the value of sand dollar, we explain to them that this is a digital money that's backed by your government. So there's a lot more safety or a lot more peace of mind involved in that.
Excellent, Richard. Now there's a question from our audience to Carlos. Carlos, this question is in the challenge of the normal challenge of innovation versus regulation. Now that how to manage that tension. Some of our people from there are saying, well, the future is crypto, is DeFi, is decentralized finance, non-fungible tokens. The market is global nor local. How to navigate this tension?
Well, principles is the key. If we understand well the international monetary system, we understand that it's based on trust. And what central banks, why they exist and why they have existed for so long is because they have adopted a culture of preserving trust and providing certainty in times of uncertainty. So we can have a process of innovations that is perfectly normal, that actually should be what is welcome in any healthy economic system, that it should innovate and grow. But at the same time, as a regulator, as a policymaker, you have to balance, what are the benefits of the innovation and what are the risks and the costs that is exposing the economy to, and what harm could do to consumers and the economy as a whole. So you try to balance this out, and you think about other ways in which the same innovation could provide the same benefits with less risk or with less harm for the consumers, or for less uncertainty. And this is when the policymaker arrives to a policy solution that it could be I'm not saying it's gonna be because it's understudied, but a CBDC could be an option in which you can actually have a means of payment that is completely global, let's say, because it could interact with any international exchange system, but at the same time, it could provide some certainty and security because it's being issued by a central bank. So this is very important for the stability of the economies and the patterns of commerce that we see in international economics, and allows for economic innovation to continue prospering. When you have too much volatility and uncertainty, then the innovation processes actually they tend to be disrupted and end up being failures until some other innovation processes come up in time.
Thank you. Excellent. And a difficult question that was provided, that I think is been very enlightened, your answer. Richard, we have here more like a technological questions, probably from the developers of our audience. How did the blockchain technology benefit the development of the sand dollar and the island pay solution? What can you tell us about it?
Yeah, so this is an interesting story to tell. So the sand dollar platform is actually running on a DLT, which is a distributed ledger. The central bank has actually got the platform running on multiple nodes across the country, and they're doing it this way for the case of hurricanes and disaster recovery reasons. They also have a contingency plan in place where for certain periods of time, if there's nodes offline or parts of the network offline, they're still able to carry out smaller transactions and spool transactions. And then when everything comes back online again, actually do a settlement between all the different nodes. So they didn't just build a system that's just DLT based, but they built a system with the local challenges in mind, which, in the Bahamas, we get 8 hurricanes a year. Sometimes they're very bad. And there was a recent one a couple of years ago that caused, a couple $2 billion of damage. And one of the islands is still recovering from it. And the central bank really thinks that having a CBDC, if that was to happen again, would allow people to buy supplies, order things online, recover faster, be able to transact without ATMs or bank branches involved. The island that I mentioned, actually, there were 3 banks on that island. They all closed for at least a year. So the people and the business owners were getting on an airplane and flying to another island to do their banking transactions. And the CBDC solves that problem.
Thank you, Richard. Very interesting. We have receiving in here an additional question from our audience. Let me see. Are there? This is for Carlos. Carlos, are there any implementations in place to speed up online payments when it comes to P2P, person-to-person payments, or what can you tell us about in the case of the Central Bank of Dominican Republic?
Well, what I can say is that recently, not recently, it was actually at the beginning of this year, we had a modification on the payment systems regulation, which is a very promising modification because it introduces a new complete set of game players into the payment market. And we have actually one figure, which is the payment service provider that is thought in a policy term to be a helper in this type of transactions. So the regulation has already been approved by the Monetary Board and is in the process of implementation. It takes sometimes, usually when you enact a rule, it takes a certain amount of time for the market to start adopting it, being accustomed to it and actually taking benefit of it. And you should be looking at, in the short, medium term, you should be looking at an enhanced payment ecosystem that will help to this issue.
Thank you, Carlos. Yes, I was very aware of the new regulation. That's an excellent work that the bank did in modernizing the payments framework and a step ahead for taking advantage of this innovation and to promoting competitions in the ecosystem. Apparently, we have covered all the questions that we have received from our audience. If there's nothing else that both of you, Richard and Carlos, want to add to the discussion, I'll proceed to close the panel. No, it's.
No, I just want to say a couple of things. What Carlos said about interoperability and cybersecurity is super important and usually not discussed that much when you talk about CBDCs. But those are critical for a regulator, and that's a process the central bank in the Bahamas went through, where they required anyone who integrated CBDC to both do an internal cybersecurity audit and then have a third party do an audit. And they also required that if you were going to integrate CBDC into your payment solution, if you're a bank or a wallet, that it had to be interoperable with every other licensee that did the same integration. So initially there were a couple of companies that did an integration that only worked for their own customers. And the central bank reminded them of how important interoperability is between everybody. It's not going to work if it doesn't work with all wallets or all banks. So I'm glad that Carlos brought that up, because that's really the key to the success, right? You don't want to operate something like this in a silo.
Excellent point, Richard. Definitely, the ones we are involved in this world of payments and open payment system knows that interoperability is the key element and is the real challenge in order to make progress. Thank you, Richard. Thank you, Carlos. I think this has been a great discussion that we have enlightened our audience. So we have covered different topics and show that there is a way to work together, fintechs, central banks and regulators and networks like MasterCard in order to advance. And we were discussing nothing less than the future of money in this panel. So I'm very glad that we have this discussion in a very productive way. Virginia, back to you.
Well, thank you, Richard, Carlos, and Javier for everything. This has been an amazing discussion. And as you said, Javier, we're talking about the future of money, and it's not really that much of a future as it is a present, right? We are seeing these changes being implemented now. And as we say in other fintech, that the fintech revolution doesn't stop. And it is for us to decide if we grasp the opportunity and we'll take advantage of it while minimizing all the risks that there are. I'm going to switch to Spanish now. Voy a cambiar al español. Gracias, Javier, y a MasterCard por traernos este panel con contenido tan valioso. A todos los que nos acompañan, pues recordarles que si se han perdido alguna de las charlas que hemos tenido hoy, si han llegado tarde a esta o simplemente las quisieran revisitar, pues el contenido va a estar disponible en la plataforma por 30 días luego de que concluya el Dominicana Fintech Forum. Así que ahí van a tener todo el contenido para ustedes, repasarlo y verlo. Recordarles que nos vemos luego a las 2:05 para nuestro próximo panel. Ahora vamos a hablar de Open Banking. Ese se llama Avanzando hacia Open Banking. Tenemos unos invitados bastante buenos para mostrarnos cuáles son las tendencias en la región y hacia dónde va la República Dominicana. Y pues mientras les invitamos a visitar los stands de nuestros patrocinadores en nuestro Expo Hall, a seguir conectando con todos los demás que están en la audiencia y a evaluar el panel de hoy. Por favor, a su derecha tienen una sola simple pregunta. Les toma un segundo. Si les gustó, pues por favor, déjennoslo saber. Y ahora sí, buen provecho y nos vemos a las 2:05 de la tarde.